Industries, the end-to-end lighting solutions provider for automobiles, posted a weak set of numbers for Q1 FY21. However, we discussed this stock in our ideas for profit today to really find out if the road ahead looks brighter for Fiem Industries. Well, in the first quarter of FY21, Fiem's net revenues from operations dropped 81.2%, and that's on a year-on-year basis as major original equipment manufacturers or OEMs had to halt production because of the lockdown. Now, the earnings before interest, tax, depreciation and amortization or EBITDA turned negative due to the significant negative operating leverage. Now, Fiem generates more than 96% of its revenues from the two-wheeler segment. Hence, its fortune is directly correlated to the demand recovery in this segment. Now, though COVID-19 triggered a massive disruption in the auto space, two-wheelers demand has now seen a V-shaped recovery, and that is after the process of unlocking began. Now, the demand recovery is fueled by people's preference for personal vehicles, as they really fear taking public transport because of the perceived risk of getting infected. Now, further, what is encouraging is that despite the pandemic, the company continues to have a very strong order book. In fact, they've added a new customer called Kawasaki. Also, the management highlighted that the order book is so strong that they are currently unable to meet the demand primarily, and that is due to the labor constraints that the company is facing. Now, they also indicated that the demand is expected to remain high in the months to come, especially ahead of the festive season. Also, if you see, an important trigger for the company going forward is the wider adoption of the light emitting diode lights or the LED lights. These are high value, high margin products which constituted about 23% of Fiem's sales in the quarter gone by. Now, with new products in the pipeline, the LED's share in Fiem's overall revenue is expected to increase. The management reiterated its target of really taking the share of the LED-based lights in the overall revenue to 50% in the next 3 to 5 years. Now, valuation currently remains quite attractive. At present, Fiem is trading at valuations of say 11 times the FY22 projected earnings, which is very reasonable. In fact, valuation is also at a deep discount when compared to its closest peer, Lumax Industries, and hence investors could look at buying this business with a long-term perspective.